Hello everyone, thanks for tuning in. Today we are going to talk about EC. Alright, we are going to understand what are the in and out of EC and what are the pitfalls of EC, what are the usual so-called careless mistakes that are made while buying an EC. So we are going to go through a few topics. Alright, so this is lay in front of you 1, 2, 3, and 4 already. So the reason for doing this is because unlike HDB, right, you have a whole portal and then you have officers hotline to support your inquiries, and then you have more resources to go to do your research, and then you are clearer on processes buying and selling of BTO or even resale HDB. But EC, if you don't have any prior knowledge, and then you are doing your research, right, there's a chance that you find that the information are all over the place. All right, you have to piece together the bits and pieces of information to fill out the whole pictures, and then this is some kind of a knowledge gap that I hope that I can address and contribute to the general public who are interested in EC lah. So how we are going to do it is very important. We want to understand the cash flow, all right, from the viewpoint of the cash flow, which is most important because you buy house with a lot of money so a lot of money come from your saving come from your daily work lah. So you have to understand these few things, particularly the sequence of payment. Now, sequence of payment is very different from HDB, whereby you move in, you start to make your monthly installment payment when you move in and collect the key. Now, the sequence of payment for EC is a bit different in the sense that it is based on the construction stages. So whenever a certain construction stages is ready, then the developer will call for disbursement of fund from the bank. The bank will then check their documents on the contract with you. You are the person they are borrowing the funds, then they will release the funds to the bank, to the developer. So when they release bit by bit based on construction stages, right? So the cumulative total amount accumulate, which means that it translates into your monthly installment also increase bit by bit. All right, so when the bank disperse, you suppose you are paying monthly installment of $500, so the second disbursement you would add another 500, maybe you pay $1,000 for the next 7 or 8 months. When the 7 or 8 months is due and then the next construction phase is due, then the developer will ask for the bank for disbursement of fund. It will then add on your monthly installment. So for 7 or 8 months you are paying $500. For the next 7 or 8 months you might be paying $1,000. For the next 7 or 8 months you might be paying $1,700 or $1,800. So it is cumulative. That is the sequence of payment that I want to explain to you later. But sequence of payment, you cannot understand the EC alone. You have to couple with the priority of fund. Now, what is priority of fund? Meaning to say that you pay your houses with what? With your cash, with your bank loan, as well as your CPF OA account. So priority of fund is not that. Don't be mistaken in the sense that you now have the support of the bank loan, OA account, as well as your cash, right? You can then decide during the construction phases all the way to the TOP. You can decide, okay, from this quarter I'm going to use certain proportions of fund, so you need to observe, all right? And then when you do conveyancing, when you are paying to the developer through the bank, right, these priority are very important. So many of the people who cannot understand, don't understand, assume they understand, then eventually they mix out the priority, they don't have enough cash, and it resulted in very problematic situations such as the breach of contract or the dropout unit. So priority of fund come in the sense that it expected that you exhaust your cash first and exhaust your OA balance, and then you rely on the bank loan. There are only 3 types from where you derive your sources of financing. So priority of fund together with the sequence of payment, then we will be able to understand the cash flow, and from there you understand how the EC ecosystem actually works. Now, eventually, the number 3 is financial options and profiles of buyer. We want to understand the why. Okay, the why of certain buyers, why they choose a certain sequence of payment over another sequence of payment. There are two types of sequence of payment. One is called NPS, another is called the DPS, okay, normal payment scheme and the deferred payment scheme. The name already implies normal payment scheme means step by step, by what I mentioned just now in construction stages. So consecutively, progressively, and they start to pay the monthly installment. All right. So that is normal payment scheme. Deferred payment scheme means they only pay 20% of the price of the house that they buy, and then after that they rest, take a break for 2.5 years and then 3 years. Okay, so this is the definition of deferred. You have a buffer, you have a break, okay, break for servicing the loan, and then after that 2.5 years or 3 years later until TOP, then you start to service the rest of the loan, which is typically 80% broken down into 65% plus 15%. That one we will go into it. So why some people choose certain scheme over another scheme, or rather why people choose certain sequence of payment over another sequence of payment, why people choose NPS over DPS or DPS over NPS, we are going to explore why. Okay, actually it depends on the profiles of the buyer. Means there are some determinants behind them, some motivations behind them for making the corresponding choices. So number 4 is requesting for survey participants. So meaning to say this is actually part 1 of 2 of YouTube video that I want to do to contribute to the general public in understanding EC. So the next YouTube video that I hope to do is with regards to collecting data and then understanding who are generally my type of viewers, and then after that I want to give example, more simulation, more scenario, diving into the monthly installment that they will pay when they stay in the EC already. All right, so there are 2 types of monthly installment, okay, at the TOP and after the TOP, 1 year after the TOP, which we call that typically after the CSC, whereby you can do a refinancing package with the bank that you borrow money from. So then your after that, but particularly if you are in the deferred payment scheme, you already sold your flat, so you have cash proceed and sales proceed and OA account going back to your CPF. So you have that type of money. Usually people pay down. When the people pay down, there's another type of monthly net mortgage loan service installment already by that time. So we want to dive in that. We also want to understand about the strata living. Okay, suppose you are the upgrader, you upgrade from HDB into the condominium. So what are you looking at? What can you expect as a strata living? And finally, we also want to understand after you sell your HDB, what are the options that are available to you. So all this is actually case-to-case basis. It's actually very specific to an individual or the individual household. But what we are trying to do is that I want to gather the profile of my viewer. Therefore, I have a form for you to fill. That form will definitely take no more than 1 minute, and all the fields are non-mandatory. Non-mandatory means you can choose to fill out certain field, you can choose to fill out where your patience run out, you can just stop filling out and then click the button submit, up to you. Okay, but it's very easy. It's only 7 blank for you to fill out. You fill out all this information, I gather all this information, I understand what are the profile of my viewers, and then I can target them, and then I can narrow down, and then I can do a more relevant YouTube video in my part 2 with regards to what I mentioned just now, the strata living, the monthly repayment, as well as strata living, monthly repayment, as well as what happened to you, what options you have after you sell your EC, what are the allure of EC, okay, why is it that everybody is fighting over this resource, okay. So now we proceed. So very importantly, I have to repeat, very important things we have to repeat. How do you pay for your EC? You pay by cash, then you pay by CPF OA account, as well as you pay by bank loan. So it is expected that you exhaust your cash, then exhaust your CPF OA account, and then rely on your bank loan. So if you calculate backward, right, first you know how much is your bank loan, then you can derive how much you are going to use your CPF OA account in certain period of the housing housing journey, and then eventually you can derive how much cash you need to prepare in order to buy a EC. So they are therefore interrelated. Okay, these three are therefore interrelated. You do not have a free will to decide which proportion to use at what certain period. You do not have. You must honor, you must pay attention to the priority of financing options, so they are interrelated. Now, a bit of a disclaimer also. Okay, this is a chit chat session. Okay, take this as a very domestic affair situation. This is not legal binding, it's not obligatory, it's not contractual, and then use reference and my methods, or that of a D, methods with discretion. So you want to use the method, you want to use the calculation, please exercise extra check or double check. So if I were to represent you, of course I will explain further to you, and then we'll put it into action. Okay, if you are using other property agents, then you have to check with them, and then maybe, I don't know, they might have their own methods or whatsoever. I'm not so sure. Okay, so let's go on. This is a disclaimer, take note. Okay, now normal payment scheme. We go by normal payment scheme first. Okay, there are two schemes which I mentioned: normal payment scheme and deferred payment scheme. Normal payment scheme is based on the 5%, 15%, 10, 10, 5, 5, 5, 5, 25, and 15. Now, only the first 5 and 15% are not related to the construction stages. Okay, the 5% is down payment, which you need to pay by cash. Okay, if you don't have the 5% cash, the rest no need to talk already. So 15% is when you see the lawyer 8 to 9 weeks later. When you see the lawyer, you have to prepare 15% of the property prices, okay, together with buyer's stamp duty. All right, so we are now we are not going to talk about how much is it going to cost you actually, or where do you derive your source of fund. Not now, but we are more interested in the sequence of payment first. Okay, so 5 and 15 has got nothing to do with construction stages. Then the 10% has got something to do with construction stages, which is the foundation stage. When it is at the foundation stage, the developer will ask for the bank disbursement. Okay, they have the right to do that. Then another 10%, the second 10% is at the structure. Okay, the structure stage. So they lay the powdery wall, and they really carve out the swimming pool, carve out where the multipurpose hall is going to be. So another 5%, the first 5% we are looking at building the wall of your unit. The second 5% is building the ceiling of your unit. And the third 5% is we are talking about laying the cable, laying the electrical points, and then doing the piping within your unit. And the last 5% we are talking about laying the communal facilities and the sewage and the road and the pavement of this project. Okay, then 25% is temporary occupancy period, TOP, whereby you can move in already with your luggage, with your move-in barang-barang. Okay, then 1 year later it is the CSC, which is Certificate of Statutory Completion. So they have already reached the legal completion date. There is most of the time is before the legal completion date. Okay, so basically you have stayed there for 1 year already. So another 15%, which will be dispersed, and then you will receive a letter from the bank, from the lawyer, telling you that from then onwards, this is how much you are paying the mortgage on a monthly basis. Then with the letter, then you can go and negotiate a new package with the bank. Because you have sold your flat, you have some cash proceed, you might want to pay down on whatever you own the bank, so that you have lesser stress on the financial burden of paying a monthly installment to the bank. Right? So this is how it works out to be based on construction stages. Every construction stages will add on to your monthly installment, because you have loan from the bank. If the bank loan you 17 years, 18 years, you can break them down into monthly loan. Okay, this is where you pay. The monthly loan will, of course, consist of principals and interest. I don't think I need to go deeper into that, because I suppose you own a HDB flat, and then you know what how it works. All right. So now let's take note. Wait. What is this? Okay. Okay, now you take a look at the 5%. So we are giving you examples. If you buy a 1.7 million condominium hall, so 5% is $85,000, which you need to up your pay now, or you need to bring a cash check. So supposedly these are all guesswork dates and money and amount, guesswork, estimation only. So suppose you are buying into Rivelle Tampines, okay, at Tampines Street 95, 572 units there. So you are paying, you have to prepare this on the 14th of March, okay, 85,000. You pay by cash check, or you pay by pay now, all right? You transfer the money to the developer account, all right? So after 8 to 9 weeks later, you must prepare the BSD. Okay, BSD, you look at it, is 54.6K, all right? How do you derive this? For this 1.7 million, it is 5% of the property price minus $30,400. Okay, 5%. So if you are buying a 2 million property or 1.9 or 2.1 million property, it is still the same formula apply. 5% of the property price minus $30,400, it gives you the BSD. So this example, we are taking 1.7 million, which is $54,600, together with 15% is 255,000. All right. So that one 8 to 9 weeks later, suppose on the 5th of May, you must prepare this money. All right. Now, and then the 10% we will split into 5%. Okay, 5% is you pay together when you see the lawyer, which is on the 5th of May. That one is bold black. All right, you will notice that it's bold and black in color. Another one you pay slightly later, maybe 85% or 85,000 on the 15th of May. So you will see that the first few months after you buy the house, right, you need to prepare about 25% in cash, about 25. Most of the people prepare 25%, the first 25% in the first few months that they are buying the house by cash. Okay, so you look at the blue label, it covers the spaces that are required to pay by cash. So the rest of the 75% you can pay by bank loan or your CPF OA account. Okay, which means that let me break it down for you. 5% you must pay by cash. The 15%, okay, together with the half of the 10%, right, that 20%, you can pay by cash or CPF. Then the rest of the 75% that you still own to the developer, right, you can pay by OA, CPF OA or bank loan. Okay, so there's a slight difference. You pay by cash, there's 5%. Then after that, cash or CPF. Then after that, CPF or bank loan. Okay, so the 75% usually people use to pay CPF plus bank loan, which is the 75% of the property price. And take note that this is MPS normal payment scheme, and this is with regards to the sequence of payment. All right, now we want to factor in the priority of fund. All right, so for the deferred payment scheme, okay, for the deferred payment scheme, it is different. Okay, later we will we are still on the sequence of payment, so later we will factor in the priority of fund, particularly most importantly for deferred payment. Okay, so how does deferred payment looks like? Now, deferred payment, the first thing that you need to know is that you need to pay 3% more to the developer. Okay, because the developer assume that they are helping you to outfront certain of the construction stages. Some of the, the 10%, 5%, 5%, the money will still come from the developer project account. So developer outfront for you. When the developer outfront for you, the developer think that they are entitled to this 3% additional price, okay, that they charge. Okay, so DPS is always 3% more than MPS. But the good thing is that you get a breather, you get a 2.5 years or 3 years to relax first. You do not need to service the mortgage loan. Now, 5% is the same, all right, for deferred payment scheme. 5% down payment have to be by cash, like what I mentioned. If you do not have this cash, then the rest no need to talk already. So 5% usually you pay by cash check or you pay by pay now. Then the 15%, the BSD is the same, and plus the 15% of the property prices. If you are buying 1.7, the example just now we give in MPS, if 1.7 million is inclusive of the 3%, it will be 255,000. All right, so it's the same, right? It's the same. It's a 15% of property. In percentage terms, it's the same. 15% of property price as well as the buyer's stamp duty. So 2.5 years later, so you do nothing. You paid this 20% already, you do nothing. Okay, you sit back, relax, wait. Okay, 2.5 years later is advised that you take this time to save on your cash and save on your CPF OA account. Okay, 2.5 years later, then you start to worry about the 65% plus the 15%, which is the 80%, the rest of the outstanding. So 65% of the property tax is to be paid at the TOP. Okay, suppose the TOP is 10th of November 2028, so you have to make this fund available for deduction. from the bank will deduct this amount, then the bank will disperse this amount. And 15% of the properties at CSE, which is about 1 year, the bank will disperse, and then the bank will also consecutively charge you for that. So this is the payment. Now, the thing to note is that there is a 2.5 year, alright, waiver. You do not need to pay anything after you pay the 20%. Okay, so 65% you wait 2.5 years or 3 years later, then you'll be notified about the TOP, and then you start to service the 65%. Okay, just take note that you want to buy a house, you pay 20% of it, inclusive of the 3% increase in prices. Because when you look at the price list, when the price list is released, it will have a MPS column. It will always have a MPS column. It will always have the DPS column. The DPS column is an addition of 3%, okay, on the MPS column. Right now, you refer to the correct column can already, but the thing is that if you want to go by the DPS system, it's 3% more, but you get standby now. So we prioritize the fund. Okay, the fund first, it is expected that you exhaust the cash first, then after that you exhaust your CPF OA account. Finally, you rely on the loan. All right. So as mentioned to you already, so 5% can be used on the 15% or the 5% during the 20%, which is the first few months after you buy into the project. Okay, so this one you have to prepare the cash. Now, assumingly, just take note that the CPF bought, okay, you want to use money on the 15%. The 15% is 255,000, and then plus another 50 over thousand of buyer stamp duty. Okay, if you do not have enough cash, right, you want to use your CPF to help you pay for some of this amount. All right, the 15% plus the BSD. All right, now the CPF board tell you that sorry, we are in charge of retirement. You are taking money out of retirement to buy a house. Okay, can not say cannot, because you buy house is also for retirement, correct? Many of you buy house also, you are thinking of retirement. If you are thinking of own stay for the BSD and the 15%, can, no problem. But you tell me in priority. Only if I receive a satisfactory answer from you, then I will release the fund to you. How are you going to finance your 80% of the property 2.5 years later, 3 years later at TOP? How much you are going to use? What are you going to use? How much are you going to use your CPF together with the bank loan to settle your 80% of the loan? So you must answer this question first. You answer this question first. Whatever that is remains from the usage of CPF account towards fulfilling the 80% of the loan, towards the 80% of the property price, whatever remains, right, then you can use it today. All right, so this is to, I think, presumably this is to settle the alleviate any social problems. Okay, the government has got a lot of monetary authority of Singapore, HDB, and the government has got a lot of precautionary policies in place for people not to spend too much on the housing, especially for HDB upgrader. Okay, it's just that it is behind the mechanics, behind the mechanisms of you taking a loan. All right, so one of it is this, that you have to account for 80% of the loan later. All right, then you can talk about whatever that remain from after you use out for the 80%, right? After you account for the 80%, then you can use it today. Okay, whatever left of it. All right, so the first part of the story that you must explain is how do you settle the 80%. Okay, this is called the priority of fund, and this is mostly because there's a CPF in between. Or you want to use money today, you tell me 2.5 years later, how are you going to pay for the 80%? You might argue that 2.5 years later, I have work and then I have more CPF, I have more cash, so I can account for it. Today, you let me use first. No, it doesn't work like that. It doesn't work like that. Today, you want to buy a house, you want to use the money, it's as if your CPF OA account was freeze. And then based on the freeze amount, you tell them, okay, how are you going to account for the 2.5 years or 3 years later, the 80%, and then the whatever remains you use today. Okay, a bit repetitive, but because this is very important, a lot of people make mistake in this and then resulted in a lot of hoo-ha and then breach of contract and drop out unit, which is very, very, very sad. All right, so look at the CPF. Okay, whatever you have from the CPF, right, can be used then you see the CPF go to the 80% first, right? Then the CPF then move to the 20%, which means that it symbolizes that you have to take note, you have to satisfy the 80% using your CPF account first. Whatever remains, then you can use. Okay, this is why the CPF box, the green color box, move to the right first, then move to the left, and then the rest you understand that it will be by band-loan. All right, now you can work backwards. The best is that you can work backwards. When you want to buy a house, right, you will need to get in principle approval from the bank, from the local bank, maybe UOB or OCBC. The UOB or OCBC will then give you a bank loan. There are two types of bank loan for deferred payment scheme. If you have a flat, usually you will be taking a bridging loan. Later I will explain in mathematical term what is a bridging loan. And bridging loan plus a mortgage monthly servicing loan together made out your bank loan. So if you have a lot of bank loan, basically you can use all your CPF today. If you do not have a lot of bank loan, you will use some of the CPF to fulfill the sum such that you will reach the 80%. Alright, so the bank loan is very important. Alright, the bank loan will decide how much stress that you have on today. So if you can use a lot of CPF for your 15%, right, or for your buyer's stamp duty, right, meaning to say that you don't have to come up with a lot of cash, but your CPF OA account are all used to fulfill the 80%. Just that your bank loan is so little, you have to fill all the space and shortage with the 80 to reach the 80%. Then today you have to come up with a lot of cash already because you don't have CPF OA to rely on. Now we go on to the next slide with some numbers to better illustrate this. Okay, so this is just a statement: calculate and know your bank loan first, then decide how to allocate your CPF OA money, and finally you get to know how much cash you need during the first months of your EC purchase. Okay, now suppose you are 48 years old, you have a 17 years loan tenure. This is a real scenario. Okay, 48 years old is the average age of the couple, not you one person only, because it's usually the average couples that's taking the loan together. So combined together, the household monthly average monthly income is 13,000, 17 years, loan tenure, 3% interest rate for 1.7 DPS. Now the 1.7 DPS, 1.7 property is already inclusive of the 3% addition, okay, for taking the DPS. All right. So now you take a look at the 80% first. You go to look at the right side, 80%. How much is 80%? 80% is 1360000. Okay, 1,360,000. Okay, so it's 80% of 1.7 billion. Okay, we want to make sure that we can account for this 1360000. So let's see how much the bridging loan you can get. Now, bridging loan is the bank evaluate the value of your flat. Okay, so if you have a very high value of your flat, your flat is can fetch a high value, so the bank will evaluate and then loan you 80% as a bridging loan, 80% of the value. Okay, so the valuation is based on what? It's based on your surrounding, how much people are selling their flat for, usually, as well as some valuation methods and calculations, algorithms that the bank will have. Now, the bank will loan you 80% of the valuation. I think so far the valuation are quite fair, in my opinion. So 80% minus whatever that is outstanding. So in this case, the value of the HDB is 900k. So 0.8% means 80% of 900k is 720k. But you have an outstanding of 100k, meaning to say the bank for bridging loan part, this portion will loan you 620,000. This is a formula to adhere to. And then mortgage loan is more complicated. You will have to depend on IWAA, income weighted average age, which take into account of how much you are earning, how much your wife is earning, how much is your age, how much is your wife age, and then there are some restrictions like loan to valuation and then mortgage servicing ratio and all that. You don't need to know all this, but all the bank, more or less, if they know your income, your notice of assessment and all that, they can come up with a certain figure for you. Okay, so let's say that based on the profile that we have already provided, it will be 620,000. So you will get mortgage loan at 620,000 and then your bridging loan at 620,000. So 620,000 and 620 is 1240. Okay, 1360 is 80%. 1360k minus 1240k. So you are still having a shortage of 120,000. Still having a shortage of 120,000. Okay, they know after the bridging loan and then after the mortgage loan, you are still shortage of 120,000 So you need to account for how to use your CPF OA account to make up for this shortage. So let's say your CPF OA account has got 300,000. Okay, we go for primary school max, which we break down into blocks. Okay, so what block? 80, 80, 80, 40, 20. So 80, 80, 80, 240. 240 plus 60 is 300,000. So you deploy 120,000 from the CPF account to account for the shortage of 120,000. Now, after you deploy that, right, you have the remains. So you remains already, so you need to calculate what is the 15% due today when you are buying the house. 15% is 255,000. All right, 255,000 together with the buyer stamp duty, $54,600. Okay, so how much is that totally? All right, how much is that totally? The total is at 309,600. So this is 15% of the property price plus BST. So you are going to use whatever remain after you account for the 80% of your CPF, 80,000, 80,000 and 20,000, which means that you are left with 129,600 dollars. Okay, after you use your CPF, your cash need come out with 129,600 dollars. This is 8 to 9 weeks later after you pay the down payment of 5%. So if your question is the first few months, the first 2 to 3 months, what amount of cash do I need to prepare? So this is the amount that you need to prepare: 129,600 plus 85,000, which is 214,600. Which is 214,600. These two, the upper 5% plus this 129,600, it will add out to the yellow box, which is stated 214,600. Okay, take a look at the yellow box. Okay, this is the yellow box. So this is how we factor in the priority of fund. We factor in the sequence of payment to make sure that you are ready and you understand your affordability. Okay, now, very importantly, the next thing that we need to understand is we need to know the profiles of buyer. Why certain people chooses MPS and then certain people chooses DPS. Okay, so this profiles of buyer also give you a sort of a mirror, or if you will, a kind of looking at other people examples and then decide that if this is you or not. Okay, if this profile suits you or not. So having understood this, then you will better know if you are ready for EC or not, because not everybody is ready for EC. Not everybody is eligible for EC as well. Okay, so these are all the MPS scenario, why people choose MPS. So I split them into two groups. One of it is a blue color box, another is the brown color box. So the blue color box are people who usually in their mid-40s and have a flat. In their mid-40s and have a flat, which is the left side. The left side, the three boxes, the three columns with three columns with blue box at the top. All right. So all these people are mid-40s and above, all right, and all these people are usually having a flat. Now, those that are in brown, right, those are without a flat and then usually younger than mid-40s, okay? They can be in their 35, 36, 37, 31, 2, 3, you know, so they don't have a flat. So they still choose MPS. Why? Later I'm going to explain. So, and then you have to take note of the three color of the circle. You look at the right side bottom. All right, three circles. So the red color is the representative of your blood, means your blood money, or just think it in this way. So the green color is the color of what? Your CPF. CPF logo is green color, Then the blue color is your band. Okay, think of POSB, think of UOB. Their logo is in blue, right now. So this represents how much to pay throughout the different tranches. Okay, so the first one is a legacy. Okay, the first one is legacy. When we are talking about legacy, it means that basically they want to beat the lease decay. For some of the older property agent, they might have heard of Bala curve, which means that at the 31st, 32nd, 33rd year of HDB, right, the price will start to become stagnant, and then after that, maybe 40 over years, it will start to drop sharply. All right, this is not economic factors or whatsoever. This is more to do with this policy is called the rule of 95. What it means is that the to fully utilize your CPF OA account or your loan, the younger of the couple will have to choose a lease of the flat that they are buying must be longer than their age, the younger of the couple, the age to the age of 95. So if your age, the younger of the couple, 145, 140, so 40 leaving to 95 is 55, right? So they better choose a lease which exceed 55 years old. All right. So which means that those HDB flat which is more than 35 years old, more than 36 years old, there is a significant portion of buyers they are cancelled off that we will not consider shorter lease. Yeah, correct. We'll not consider shorter lease because they cannot utilize much of the bank loan and much of the CPF OA account because of this rule of 95. Okay, so and then in addition of that, people buying over your house, right? They want to sell also in the future, maybe in the 10-year or 11-year, or they want to have the possibility or the security of being able to sell their house. So in fact, the lease decay actually key in 4-5 years earlier, maybe at the 30 years, then the price will start to drop already. So to prevent this decay, many of the old people, all right, maybe in their mid-50s or in their early 50s, first of all, they must be cash rich. So they will sell off their flat, and then they will use a lot of cash to pay down the EC prices, okay, while it is still affordable. So they use a lot of cash to pay down the EC prices. Then after that, you sell off the flat with the cash proceed. Then you use the cash for that proceed to double down paying for the outstanding. Okay, so they do it for their children. Okay, this is parents do it for their children, so that when they passes on, right, what they leave behind is a private property. Okay, so a private property, when they leave to their children, right, their children can actually inherit. All right, if the children, even if the children are living in a private, they have a private property, they inherit a private property, there's no ABSD. Okay, so Singapore don't have tax in this So they actually have two property. All right, so this is one of the way that you do not need to pay ABSD and yet you have two properties, so you can inherit. But if you are inheriting a HDB flat, right, unless you are staying in the HDB flat, all right, and then you have to sell off the property. You have to sell off one of the property. Okay, so you usually people will sell off the property. So imagine that your parents have stayed in the HDB flat for so long already. The lease are not that spectacular. Not much lease was left behind. You have to sell off and then get back lesser money. Right, much lesser money. Okay, versus if your parents were to upgrade into the private property, then maybe pay for 17 or 18 years. All right, because bank can extend 65 years old, extend it to 73 years old. Some of the bank you have to negotiate with the bank, and then they will get a loan. They will get a loan. Usually is more than 300,000 K. All right, so they serve it or they pay it down with cash or whatsoever. But the thing is that you want to change for HDB, you understand this decay, what this decay can do, and you understand on will and inheritance, or you studied it and then you understood it, so this is what you want. So at old age, they change into a EC, which is more affordable than private condominium, and then they leave behind something for their children which they can properly inherit. Even if they want to rent it out, suppose they have 3 children, then the 3 children maybe will take turn getting the rent, all right, or they will split it between the 3 of them, okay, depending on the will and all that. Now, this is the legacy. This is parents to children. In another way, the children can also help the parent to do this, because the parent worked so hard already, right? So suppose there are 3 children, so every one of them come out with 250,000 of cash. So the 3 children come out with 750,000 of cash, right? So they give it to their parents. The parents upgrade into an EC, right? So their parents upgrade to an EC. Much of the EC are already paid, right? Together with their own saving, and then they sell off their flat. They have the cash proceed to pay down the flat and all that. So then the a bit harsh or a bit blunt. The children are doing a kind of boomerang. Okay, something that will benefit them at the end of the day. If their parents passes on, they will still inherit the as a private property inheritance. Okay, so private property inheritance, that one, if you come up with a will, that is much easier than it's not that restrictive as compared to HDB. You come out with a will, right now. So this is one of the considerations. So for these, much of the cash will be paid. All right. So you look at the red color circle, much of the construction stages are all paid by cash. Then they also maybe because of their old age, they don't have a lot of CPF OA already. So the green color circle is much smaller, and then they can borrow not much because of old age. The bank don't want to loan to them unless they have a running business, and then the business generate good amount of income. If not, they won't be getting a lot from the bank. But however little, it will be 300,000 and above most of the time. So they will sell their flat perhaps earlier because they got 3 children. Usually people in this for legacy, right, they are able to sell their flat earlier. They are able to capitalize. They sell their flat earlier, they have more cash, then they pay down. Then they pay accordingly for the few of the 5% sequence of payment. Right? So this is one reason, which is a legacy. Then another one is people who really want to save the 3%. If you are buying something that is 2.1 million, you are talking about like what, 70 over 80 over of 70,000, 80,000 of additional that you are paying for. That's quite a lot. So people want to save on this. So they want to strategize. They want to do their timing. They work with their property agent in a way that after they sell, they can use the money to pay for the 25%. They want to aim to use the sales of their flat to pay for the 25% when it is due. And then much later, they will use much of the sales proceed again to pay for the 15%. Okay, so they might use the cash that they usually will get from the buyer, and they pay it down with 25%. And then after that, when the CPF OA account is coming back, right, they will then use it to pay for the 15%. So all in all these people need to aim. Okay, so they sell their HDB usually with extension of stay, okay, which means that they sell at the DOP side. So their CPF is also not a lot because mid-40s and then their bank loan are also not a lot because they are of age already, but they sell off their flat closer to the TOP. Okay, with an extension of stay, then the proceeds they will use to pay for the 25%. But they must have a good cash amount to start with. That's why the red color circle is quite big, right? If you notice it. Now, the third type of people with flat and then are still using MPS are people who are usually businessmen. They are very cash rich. They have a lot of cash. Now, it's one thing to report your income, which is another thing that how much cash you have. You might have cash in your retained earning or in your working capital or whatsoever. All right. So you use the cash to pay, just pay naturally until the restriction. So what is the restriction? The restriction is after the TOP, right, within half a year, you must sell your HDB flat. So this is what these people are doing. They pay by the cash, and then when the restriction kick in, right, TOP, they move in, then they start to sell their HDB flat, which means that they will usually sell their flat much later, which is after the TOP, then they will sell the flat. Okay, so all these people, to use the MPS, they must have good cash support. All right, they must have cash support, but the periods of selling their HDB is a bit different. Some sell earlier, live with their children, or they rent or whatsoever, like the legacy one. Some sell already with an extension of stay, then they want to do a smooth transition moving into the EC. Some just move in already and then just start to sell their HDB flat. Okay, so this is 3 scenario of MPS for people in mid-40s and above, and for people with HDB flat. Okay, now the brown color, we are talking about people who are younger, don't have a HDB flat. Okay, the first one is really they cannot buy there's a typo here. I'm so sorry. Income between 14k to 16k. All right, because anything more than 14k you cannot buy HDB ma. I'm so sorry. There's a typo here. The brown color first box. Income between 14k to 16k. So if your income fall between 14k to 16k or 14k to actually 18k within this, you don't want to buy a private condominium, but you want to buy something new, the HDB is not for you already. You exceed the income level. All right, 14k is the income level. You exceed the 14k, you can only look at private property. One of the best private property which is lowest in price is EC. So these are the people that will buy. No choice, they will have to buy the EC. Okay, so they will have to pay the 25% cash law. Okay, similarly, all three of them, all three types of younger buyer which do not have a flat will have to pay like plus minus, be prepared, 25% of the cash they must set aside one. Okay, like what I mentioned earlier. So the second type of buyer is no compromise. So usually these people come from condominium or landed property. Okay, so it has come to a stage that they got married and then they need to get a house, and they can probably, the wife or the husband don't want to stay in the landed property or the condominium, so they will have to get something on their own. So they have to come out, and they really cannot stand some of the features of the HDB. All right. Now, a lot of people like HDB, that one goes without saying, but there are some also quite a lot of people who cannot stand some of the features of HDB. Okay, we will not be mentioning any of those here, but there are. Okay, so they cannot compromise. They do not want to compromise. They really don't like it. They cannot tahan it. They cannot tolerate it. Therefore, they go and buy a condominium. Okay, now the third type is the strategies. Now these people, these young people, they understand the property game. Okay, they understand the rules of the property, how it works in Singapore. So basically, they understand that the bank loan is not really a debt. The bank loan is some kind of a leverage. They also understand that the property prices will keep on rising and keep on rising. They must enter at some point in time. They must enter fast. They understand these 2 points. Okay, and then the third thing that they also understand that usually people who are strategists, they will agree with me that they want to start higher first. They want to start higher first, and then as they go through the drill of higher money mortgage, right? So later on, they want to when things iron out, like eventually 10 years later they stay in the EC, they will know how their children fare in school, which school their children will go in the secondary, and then how their jobs is doing. So then there and then they have more options. They can downgrade. If they downgrade, the profits from their EC is likely to support them in choosing almost any flat in Singapore, any second-hand flat in Singapore. But the thing is that if they don't reach the age of 55, take note that they must fulfill 15 months of renting somewhere else first. They cannot buy immediately. They must rent somewhere for 15 months. After 55 years old, right, if you are buying 4-room, 3-room, then you do not need to do this 15-month rental period, without period. So you can just move to any 4-room or 3-room. I think 5-room you still have to fulfill the 15-month, or you can come up with an appeal letter to the HDB. But if you are not 55, right, you have to rent somewhere for 15 months first. Then after that you can buy the second-hand HDB flat. Then you look for any flat that you want in Singapore. So people tend to strategize. They start high, then they see how, then they will decide whether to split into 2 property or whatsoever, depending on their job. Because 10 years or 15 years of housing plan, they will know their life trajectory. They have better gauge already, and then they understand that the price will grow, so there will always be a profit. There will always be a HDB to fall back on. So these are the people who are, I call it the strategists. All right. So these are the people who will be taking MPS. So there will be 25%. All right, and then a certain percentage in CPF OA. So if you are young, you do not have a CPF OA, but you might be very highly paid and then you have a lot of CPF OA. I don't know. Okay. So also you have to depend on your payment, your salary. Okay. You might get a lot of bank loan, or you might not get a lot of bank loan. If your salary is high, of course, you will get a lot of bank loan. So these are the people who will be taking MPS system. Now, we want to look at the DPS also. Okay, what are the people who are taking the DPS? All right, the people taking the DPS are people who need to use the CPF to help them pay. They really want the EC, but if they don't want to be so stressed out on coming out with so much cash, so they need some CPF support. And I mentioned earlier, right, the CPF OA will have to depend on how you are going to account for the 80% later on 2.5 years at TOPs. All right, after that, then you can use the CPF OA. So these people use capitalize on the deferred payment scheme, and then they want to free out their CPF OA so that they can use the CPF OA. All right. So very importantly, deferred payment scheme, the 5% you take note just to up your pay now account, and then 15% you take note that 8 to 9 weeks later you have to prepare for it. Then 65% and 15% is 2.5 years later. Deferred payment, you do not need to worry for 2.5 years to 3 years. Okay, but there's one thing that I would really need to highlight, and a lot of people don't know. A lot of it was not really mentioned, and that is the resale approval letter. All right, you see bold. All right, the third square at the bottom, resale approval letter. Now what it is you know that Singapore selling your HDB flat, right? It goes through a process. All right, the process are broken down into different stages. Different stages has got different waiting time. So one waiting time leads to another waiting time. One stage leads to another stage, and the waiting time and is not definite. It will not be always 2 weeks or always 8 weeks. It will not. Sometimes it can be 7 weeks. Sometimes it can be 8 or 9 weeks. But the thing is this. Resale approval letter means that you already have a confirmed buyer who signed an OTP with you. All right, and this is the stage that is just before completion. This is the stage, usually 2 weeks before the completion. What is completion? Means you hand over the key of your HDB to the buyer already. So you must time it in such a way that the resale approval letter is before the ECTOP, and then you give it to the bank. What does the bank do? The bank will then, having this resale approval letter, will disperse the bridging loan. They need to see this resale approval letter in order to disperse the bridging loan. This is very important. So your timing, you must work with your property agent in such a way that at least 1 month before hopefully 1 month before the TOP, you can produce this resale approval letter such that the bank will release the bridging loan. If the bank don't release the bridging loan, you have 65%, not all the 65%, depending on how much bridging loan you take. If you are taking like 300,000, 400,000, that one is, the bank won't disperse that amount of money. It's 80% of your flat. So whatever the amount is, 400,000, 500,000, which is representative of the bridging loan, that needs to come with resale approval letter. Resale approval letter will depend on the second last stage of the HDB resale process. So you must time this properly. All right, these are the stages. All right, or look at all the circle. These are typically all the stages. So all the stages come into play, and then you must aim that the resale approval letter better coincide 1 month before the TOP, such that you can bring this letter, show it to the bank will disperse the bridging loan, and then you do your smooth transition over into your new flat. Okay, so this is one thing that I hope that you all can take note of. All right, so that's the end of my presentation. The last that I want to touch on is that I want to say 2 things. Number one is that you buy an EC, it's not exactly that you're buying something. It's not something that you buy and then you buy a refrigerator, you buy a vacuum cleaner. It's not something that you buy. It's something that you need to factor in, okay, in your life trajectory, in your housing journey, in your asset progression. All right, in a very holistic way. You know why? Because it's not you spend money to enjoy. It's really not that. It's about your how you want to retire, what you want to retire with, what you want to leave behind for the next generation. What options do you want to have later on? If you buy a private property, you have many options. You can sell one, buy two. You can sell one, buy one. You can sell one, move back to HDB, and then one of it essential occupier, things like this. You can do all this type of arrangement, but that one we leave it to the next YouTube video lah. All right. So take note that you are actually not buying. Even if you, this is not something like property agent. EC is not buy there, sell, buy, please buy from me. It is really not. It is really buy and then need to do a lot of explanation to you, because it has got to do with your life planning, with your financial planning for life. So this is something that you see how it fit into your lifestyle, how it fit into your income level. Is it affordable or not? All this is a bit personal. All right. And then you must also understand that there's a 30% cap there. So if you don't get the EC, right, everything that you have participated and you have put in the effort will go to waste. You do not need to pay the property agent any money, any commission or whatsoever, which means that all will go to waste, all disappear, all dissipated. All right. So you also do not need to pay the bank for doing your valuation or your IPA or whatsoever. You incur almost no monetary cost except of course you take bus here and there. That one we don't count, right? But in terms of monetary cost for property related transactions, right, you almost incur no cost at all. All right. The 30% cap that I'm talking about is that during the first booking day, only 30% will be reserved for the second timer. The second timer are people who has not who has enjoyed one-time BTO or one-time grant. If you enjoy one-time grant and one-time BTO, you are considered a third timer. Then you are not eligible already. So that one is a eligibility criteria, okay? So if you have only enjoyed one-time grant or one-time BTO, then you are considered second timer, and second timer can buy only 30% of the unit. So 572 units at Rivelle at Tampines, it means maybe 170 units reserved for the second timer. So if your queue number is like maybe your queue number is 210, okay? So before you there are 209 participants, okay? 209 people in front of you. Of the 209 people that are in front of you, there are a good number of 175 or 180 of them are second timer and they decided to buy. Then you are out already. You cannot buy. You wait at least for 1 month later, then you can decide to buy or not with the whatever remains on Rivelle at Tampines. So do understand it's not something that people sell to you, you want, then you get to buy. It is subjected to your queue number. Okay, this is very important. Another thing is that a lot of people think that they are buying, but I mentioned already, they are not actually buying, they are participating, and then they have to do this holistically. Then the next thing is that you have to think about your CPF OA account. So a lot of people they are stuck, like they don't want to own any debt already. All right, they finish paying off the BTO. Paying off BTO is relatively how to say easier relatively, okay? So they don't want to take on another loan or whatsoever. But a lot of people really forgot that at the CPF OA side, right, even you finish paying your houses, right, the accrual interests are still kicking, and it is compounding, add on compounding, okay? So with that in mind, you must think of how to best optimize your CPF OA account. Okay, you use it one time. Is it called optimization? Or you use it second time? Is it better? Or you use it 3 times? When you use it 3 times means you move house 2 times or more. You know. So when you use the OA account, anyway you are going to use. But if you decide to use it for 1 time in your life, and then it will invite accrual interest, at the end of the day, is this what you want or not? So if you sit down with a property agent, your property agent work around your CPF OA account, you buy house 2-3 times versus you buy house only 1 time, the outcome, which outcome do you want? You utilize the OA account to do your asset progression, change house 1-2 times, and then you are better off in that way, or do you want to use it 1 time? And then you can declare that you don't have a debt or whatsoever, but somewhere the interest is sticking. All right, but you don't care. You know, it can be thought of like that also lah. But you must understand the whole picture, the whole system. how you use the OA account, how you optimize it, or how is it underperforming for you, under optimized for you. All right, that is an aspect that I find that a lot of people don't really care about. All right, now the next video that I will be doing is actually about the money payment. All right, owning a EC and then doing a money payment. So for that I need a lot of profiles. If you can, my dear viewers, please participate, fill in a form in my website, which is tanjung1.net. You give me some of the profile. You don't need to give me a true name. Just give me your age and your income. That's good enough. If you want to give me your postal code, then if I have your email, right, I will return with evaluation of your flat. Okay, if you fill out the form with your postal code, I have your email or your phone number, I will WhatsApp you on the evaluation. Okay, but that one is also some kind of estimation based on today market. All right, so please help me fill out the form, www.tanjung1.net, and then property docs, /property docs. Okay, so just take note, this is my wife, all right. My wife and I are property agent. Okay, we work interchangeably. Okay, sometimes we fix the appointment also interchangeably. Okay, I hope that you're okay with this. All right, so if you click under this, this is my website. Okay, you take a look. You scroll all the way down. These are the few. That is all. These are the few that you need to fill out. The age, and then your income level, and then let me know when do you get your key collection. When is your key collection? Estimation will do. And then if you this column here, you put down your postal code, then I will give you a valuation of your current flat. Then you click submit, then I will receive it. The more I receive it, then the more I know what to produce in the next simulation, in the next scenario. So I want to make it as relevant as possible. So this is all I have for today. All right, we will end